Hello and welcome to our step-by-step guide for a book summary of Little Book That Beats the Market by Joel Greenblatt. In this guide, we'll be focusing on two important concepts that Greenblatt discusses in the book: return on capital invested and earnings yield. Step 1. Introduction of the book. Little Book That Beats the Market is a book that provides a simple and effective investment strategy that has been proven to work over the long term. The author, Joel Greenblatt, is a successful investor and hedge fund manager who has used this strategy to achieve exceptional returns. Step 2. Concept of value investing. The strategy that Greenblatt outlines in his book is based on the concept of value investing. This involves buying stocks that are undervalued by the market, and holding on to them until their value is recognized. Step 3. Return on capital invested. One of the key metrics that Greenblatt uses in his strategy is return on capital invested. This measures how efficiently a company uses its capital, and is calculated by dividing a company's earnings before interest and taxes by its capital. Step 4. Earnings yield. The other key metric that Greenblatt uses is earnings yield. This measures a company's earnings relative to its stock price, and is calculated by dividing a company's earnings per share by current market price of the stock. Step 5. The magic formula. Greenblatt's magic formula combines these two metrics to rank stocks and select the top-ranked ones for investment. This formula involves ranking stocks based on their earnings yield and return on capital invested, and selecting the top-ranked stocks for investment. To implement Greenblatt's strategy, investors can follow a simple step-by-step process. First, they can screen for stocks with a market capitalization of over $50 million. Then, they can calculate the earnings yield and return on capital invested for each stock, and rank them based on these metrics. Finally, they can invest in the top-ranked stocks and hold onto them for a year before repeating the process. Step 6. Common misconceptions. One common misconception about investing is that you need to be a financial expert to invest successfully. However, Greenblatt's strategy is simple enough for anyone to use, and he provides step-by-step instructions for implementing it. Step 7. Conclusion. Little Book That Beats the Market provides a practical and effective investment strategy based on the concepts of return on capital invested and earnings yield. By following Greenblatt's magic formula, investors can achieve exceptional returns over the long term. We hope this step-by-step guide has been helpful in summarizing the key points of the book. If you have liked the content, please share and subscribe the channel to get updates if any.